You mentioned that people perceive healthcare to be defensive and that such positioning is consensus. How do you reconcile that with very low valuations of companies like Pfizer and some terrible price actions like in the generic space, Teva, probably going to some of the pricing concerns that you mentioned. People are pretty bared up, so even a company like Anthem. So how do you frame that up?
Yeah, I mean, it's right. So that's why we looked at the index, right? So any given story is going to have its own sort of idiosyncratic story, and Pfizer's really just been coming out from under patents, out from under mergers, out from a new CEO who's being sort of energized the infrastructure. I'm not about to figure out or spend the time to try to figure out how to model that company, just because it's as much as time as you want to spend, I don't think anybody's going to really figure it out. They trade more like bonds than anything else. So yeah, you can point to me. LifePoint is, I don't know what the multiple is today, but it's super cheap. There's plenty of examples like that. But when we look across a large continuum of companies, I think, and again, the commentary, this is sitting across the table from people who are, essentially expressing to themselves to me in terms of, I'm hiding out, I'm renting this, I'm worried about all this other stuff, but I'm long healthcare because, and select names within healthcare. So yeah, you could have a bullish view on Pfizer, and that could work. But I think the worry we would deliver to you and say something you should be concerned about is that if you look at Pfizer's relative multiple, I would look to see how consistent that's been over time relative to some of its other metrics and say, okay, well, what if the tide goes out and the multiple shrinks across the board? You're going to be paying this relative multiple game where, well, it's 1.2 times this market, it's 0.9 times the market, or whatever the number is going to be. Is that a more consistent, or is it more driven by EPS growth, revenue growth, forward guidance, like whatever it's going to be? But easy to pick out single names, I think, but I think the point is both anecdotally from our clients, but also what you can see in the multiple ranges. In the aggregates.
Great. Do you have anything to add to that, or on the pricing side, or?
No. I mean, I'm not a fundamental analyst, but from
the policy perspective.
From the policy perspective, the drug thing is gotten a little crazy, because I mean, there's this whole idea there's going to be this clean sweep, and it'll be the end of the world. The dogs and cats sleeping together. It'll be the end of the world as we know it. And if you look at Clinton's drug policy, it calls for more product, not less. More generic, funding the Office of Generics, and on and on and on. There's nothing being contemplated there that should scare anybody, except maybe a little bit of transparency, which is long overdue.
You think people are going to be scared anyway and asking you lots of questions about it over the next?
Oh yeah, they already are.
Because the news cycle is going to get.
The news cycle is the liberal hordes are going to come take the Capitol, and that's not the kind of candidate that Hillary Clinton is. And the people that are that kind of candidate represent a pretty small minority of the Democratic Party still. Now that may change in 4 years, but that's where things stand today.